Hi, this is Jim Lane, the economic realist. My November newsletter message may be the most important and easiest I've offered. While most economists seem to argue the economy is weak or it's strong for these reasons or those reasons, I think that binary approach is completely outdated. Instead, this month, my argument is that the economy is fragile. The financial leverage in the system and sovereign government debt levels, along with accelerating corporate layoffs, mean there is very little wiggle room for any economic shocks. A housing downturn or another pandemic, or more likely, a private debt revaluation would likely force very aggressive monetary policy actions. So more aggressively than ever, my portfolio is long what I would call anti-fragile investments like dirt, my mortgage-free residence, gold, silver, Walmart, and other investments that benefit from chaotic financial conditions that I believe are very likely in 2026. I also this month highlighted Wisdom Tree, ticker WT. It's a $12 stock. I think it should be a $20 stock right now based on free cash flows that are approaching $1 per share per year. I think in a takeout it could be anywhere from $20 to $30 because the ETF business that they're a strong player in is definitely going to need to consolidate. There's too many players, and the synergies are tremendous. By the way, this company is pretty remarkable because it runs with just over 300 employees and is generating somewhere around $300,000 in free cash flow per employee per year. So extremely profitable. The risk is there's some very high operating leverage, so that works both ways. If you have a slowdown in revenue or decline in revenue, that's going to hit profit margins pretty significantly. But I do think this is a long-term play on the ongoing shift of investor money from mutual funds and into much, much cheaper products like ETFs. So overall, my message is don't focus on what the market does these next couple months. The volatility is probably going to be high because it's November and December, and professional money managers want to make their bonus targets for the year. So you're seeing stocks like Stride this past week, which didn't have awful numbers, just commented on the near-term growth, and the stock gets more than cut in half. I'm sticking with names like Walmart, like my gold position, like my silver position. All things dirt tend to hold their purchasing power when the Fed has to get very, very aggressive with monetary policy. We're nowhere near that, and gold is holding in above $4,000 an ounce with aggressive monetary policy. I don't know where it's going, but I'm pretty sure it's going up. Thank you, and leave me any comments.